This is how you minimize your tax bill and maximize your deductions as a business owner. Hi guys, on the last video I spoke about the year-round tax saving plan, and I went quarter by quarter what business owners need to be doing, the actions they need to be taking to ensure that year-round they are preparing for tax season, staying ahead of their finances, and maximizing all of their deductions to make tax season a breeze instead of it being a stressful compliance burden that just leaves you bewildered and just instead you feel empowered, refreshed, energized, like you've got everything in the bag, you were prepared and you got ready. That was the last video. This video we're going to be talking about the 12-month tax saving plan checklist. So the actionable checklist that you can be taking and utilizing. This checklist is for compliance, documentation, and optimizing opportunities in order to minimize your taxable income as a business owner. And then we're also going to be talking about the entity scorecard and making sure that your current entity structure is working for your business and it's not costing you money during the tax season, but it's actually enabling you to optimize your tax deductions, and it's actually a tool that enables your business to grow. And then we're going to also be talking about audit proofing fundamental, making sure that you're keeping meticulous records to minimize and mitigating IRS scrutiny. And just so you guys, if you guys did not see the previous video, this is the book that I'm going through. This is Top Business Owners Year-Round Tax Saving Plan. This is how top business owners save money year-round. This is also a personal journal, and I'm just going through the information that this books provide. Okay, so let's go over the checklist that business owners should be utilizing. So we know the key to minimizing your tax bill is having fundamental systems that enable you to save money, to keep track of all of your finances, and enables you to plan ahead and to strategize for the tax season and maximize your deductions. So the first thing on the checklist is to make sure that your business account and your personal account is separated. And since I have the book open right here, what I'm going to be doing is I'm just going to go down the list. So I'm going to be looking at the book. So this is what's on the checklist. Perhaps here's the book. Separate business and personal finances, categorize and reconcile expenses, maintain digital expense records, track business mileage, document home office usage, review 1099 contract status. These are all the things that I was basically talking about already in the year-round tax saving plan, and this is the checklist that goes along with that plan to make sure that you as a business owner, you are checking everything off the list, because this is like a workbook that you can utilize as you go through the book. It teaches you what you need to be doing as a business owner to maximize saving, and it gives you strategy in how to minimize your taxable income, minimize your tax bill, to save money as a business. But also it provides you with this wonderful checklist to make sure that you are able to go through the book, learn, and then apply it. Apply what you've learned and keep track of what you're learning. So here's the checklist. This is quarter one's checklist, quarter two checklist, quarterly compliance and review. Quarter two, you review your QBI deduction eligibility, your qualified business income deduction. You check if your estimated taxable income falls within the phase-out threshold for the 20% QBI deduction. So this is important because if you remember from the last video, quarter two is where you estimate what your taxable income is going to be at the end of the year, and you're taking actions to make sure that you are decreasing your tax liabilities. So if your income is too much, you want to be taking steps to either accelerate your expenses, acquire assets to minimize your tax liability, to ensure that your taxable income falls within the phase-out threshold for the 20% QBI deductions. Use your profit and loss statement to project tax liability and remit payments by the relevant deadlines. Review P&L to assess financial health and identify large unusual expenses that may need better documentation. Documentation is especially important to make sure that you are audit proof. If you are an S-Corp owner or have employees, ensure withholdings are accurate to avoid surprises. Add any new equipment or large purchases to your depreciation schedule. Okay, so that's a checklist for you to go through. That's a checklist for business owners to go through. This is the next page. Quarter three checklist. Strategic mid-year check-in. You evaluate your retirement plan contributions, structure review consultation, identify potential tax credits, research credits like work opportunity tax credit or R&D tax credit if you have eligible activities or hiring. And I have another book. This book is specifically for business owners, but there's another book that is more general. It is for personal taxes as well as business taxes. But in that book, there is a list of tax codes that business owners can utilize. In that book is also how you can get qualified for those business codes so that you can actually qualify for them and utilize them and get the deduction that it provides. And then the Q4 checklist: accelerate deductions, defer income, execute Section 179 purchases, purchase that place into service qualified equipment, software, or vehicles from December 31st to deduct the full cost immediately up to the annual limit. Max out retirement funding, pay employee bonuses, wages, and generate year-end report. All right, so that's the checklist that people need to be utilizing. The next thing I'm going to be talking about is your entity card, your entity structure. We have sole proprietorship, LLC, S Corp, and C Corp. I love how this book has a very detailed breakdown of each entity store card and the benefits of each. It also talks about how you can leverage each of these store cards, depending on whichever one of them is your entity store card, to maximize your tax saving. And I love the graphs. I love the charts that it's showing because it helps me to visualize and learn a little bit better. Okay, so let me show you what it's showing. So in this book, what it's showing right now is it's showing each entity store card, and then it's showing the liability protection, taxation method, self-employment tax. So it's showing you the benefit and also potentially the cons of each structure. Sole proprietorship: owner's personal assets are at risk for business debt. Taxation method: pass-through, business income less reported directly on owner's personal form. You'd fill out a 1040 Schedule C. Self-employment tax is very high for sole proprietorship. 100% of net income is subject to self-employment tax, Social Security, and Medicare. So that's what sole proprietorship. LLC is considered disregarded income. The liability protection is high. Owners are generally protected. Separates business and personal assets. Taxation method: pass-through, same as sole proprietorship, so you have to fill out that personal form 1040 Schedule C. Self-employment tax is high as well with an LLC. 100% of net income is subject to self-employment tax. If you have an S corporation, liability protection is high. Shareholders are generally protected. Taxation method: pass-through. Income loss passes to shareholders' personal returns, but there's no corporate tax. Self-employment tax: optimized. Owners are paid a reasonable salary subject to payroll tax, and the rest is distributed as tax-free dividends. Avoids self-employment tax. C corporation: liability protection, the highest. The business is separate legal entity offering the strongest shield. Taxation method: double taxation. Pays corporate tax, Form 1120, and shareholders pay a second tax on dividends. Self-employment tax: none. Owners are employees. Income is taxed at the corporate level. Dividends are taxed personally. So that's some information on the different store card entities, and it keeps going. The information doesn't end there. It talks about QBI deduction eligibility, how much percentage of the qualified business income is eligible for deduction. It talks about the administrative burden, and it also talks about what it's best suited for. Like sole proprietorship is best suited for freelancers, LLC, small to mid-sized businesses, and S corporations, profitable businesses with owners actively working in the company, and then C corporation, large growing business planning to raise outside capital or issue stock, or those benefiting from flat corporate tax rate. So it goes through all of that, which is awesome. When should you as a business owner consider changing your tax structure? There are two major reasons or factors as to why someone would change their tax structure. The first one is profitability, and number two is risk. For example, switch from sole proprietorship to LLC. This is an important switch to make if you are moving past the hobby stage of business ownership and you're moving into a more serious role and your business is really starting to gain traction. Your revenue has significantly increased. You are starting to take on debt or hiring employees. It's becoming to be more serious. It's not a hobby. This business can potentially affect your personal life, and you now need protection from your business to make sure that it doesn't also affect your personal finance. Or maybe you want to switch from an LLC to an S Corp. This is something to do once your net income is consistently high, $80,000 a year or more, and you've noticed that the tax that you can save from reducing self-employment tax is great, or rather it outweighs the administrative cost of running an S Corp. This would be a great move for many profitable small business owners. And a good note for anyone to note is that remember that your entity structure, your choice of entity structure is a trade-off. So just know, pick your poison. Make sure you consult a tax professional before making any serious, changes to your entity structure, or if you need more guidance, clarification, more information concerning that, consulting a tax professional would be the best step. The last thing I'm going to breeze over is audit-proven fundamentals. This is you keeping a very documented and detailed information about your business finances, so that if for any reason the IRS audits you, you have documents, you have proof, and it's very detailed, and it mitigates your risks of IRS scrutiny. And this book has a digital guide to how you can audit proof your business. And there's two main things that business owners need to be aware of that the IRS looks for. Two main things that cause IRS scrutiny. Two main things that IRS looks for when they're looking at business owners' tax or business taxes. Number one, is your business separate from your personal? And number two, expense documentation. So are you keeping your personal accounts, your personal finances separated from your business accounts and your business finances? There's no commingling happening. That's the first thing. And the second thing is documenting business expenses. Document your business finances. Keep a very meticulous records of everything. It's like back to that first video I was talking about, documenting. If you want to utilize the deductions that come with vehicle deduction and mileage tracking and vehicle deductions, if you want to utilize the deductions with that, you have to be tracking your vehicle mileage, your business vehicle mileage, tracking your travels, tracking everything, and keeping a very meticulous record of everything. That includes the date that you traveled, how many miles you traveled, just basically like work. Like when you go to work, when you have a regular job, you have to check in, right? They document everything. You have to check into your job and you have to check out. When you go on lunch, you have to check out. When you come back, you have to check back in. When you leave, you have to check out. So do that for your own personal business. Document everything, date, time, where you go, when you got back, how many miles, like be very specific, be very detailed. Document everything. It's mandatory that you have a dedicated business account and establish a firewall. Separate your personal from your business, please. Here's a good rule of thumb. Never pay your personal expense from your business account. That is called commingling. And also never pay your business expense from your personal account. Keep them separated. The IRS sees that when you pay your business expense from your personal account or vice versa, the IRS looks at that and says the accounts are commingling. You have funds commingling. This can't be right. You can't do that. Also affects your deductions. It affects your business taxes. It affects your personal taxes. Don't mix. If you do end up using your personal accounts for your business expenses, make sure that you document it as an owner's contribution or reimbursement. Make sure you're documenting it. And if you end up using paying from your business account your personal expenses, make sure to document it as an owner's draw or distribution from your account. An owner's draw or withdrawal is when the owner basically takes out from the business account. So they take out a certain amount of money, whatever money that is, you document it, and it comes out as an owner's draw. It's very important that you keep a firewall between your personal and your business expenses, because commingling funds is one of the quickest and easiest way that the IRS can say that your business is not legitimate. What will happen is there would be piercing the corporate veil. That is a term that comes about when the IRS determines that a business is not legitimate because there was commingling funds. And what happens when the corporate veil is pierced is basically your LLC that is supposed to protect you no longer can protect you. because it's not a legitimate business, so you won't be legitimately protected. And what can also happen is a disallowance for all deductions. So you won't even be able to claim deductions anymore. So that's all I have for you guys today. This is the second video. That's all I have for you guys so far. I hope this video was educational. I hope it blesses you. I hope it teaches you something. Yeah, I hope you feel empowered now, and you feel like you're more knowledgeable when it comes to business taxes and filing business taxes and keeping meticulous records year round, not just last minute filing, getting all your files and everything together December. I really hope that this blesses you and you feel empowered with this new information. You feel equipped and you're ready to go take care of your business finances and funds and really just rock this tax season and have a blast this tax season. That's how you minimize your tax bill and take advantage of deductions. And I just sort of glossed over some of the topics in this book. If you want the book, it's available on Amazon, and this book there's so much more information in the book. And if you need space, if you do buy this book or you're looking into buying this book and you need space to journal, there's space in the book as well for business journaling, for you to journal and make note of and document any specific information that needs to be documented. It's recommended that you utilize a software, an accounting software, something that documents all the information for you so you don't even have to worry about it and it's automated. But yeah, sometimes we do need to write some stuff down. Anyways, that's it. That's all I have for you guys today. I'm so tired. I'm so exhausted. You have no idea. My brain is compuzzled. It's late. It's nighttime. It's so late. Anyways, you guys have a good one. God bless.